How to get started in the stock market. Explained simply. Are you curious about the stock market but feel overwhelmed by where to begin? Don't worry, getting started is simpler than you think. Whether you have $100 or $1,000, this video will walk you through the step-by-step process of starting your investment journey, even if you're a complete beginner. Stick around to the end for some key tips on building long-term wealth the smart way. Stock market investing. The stock market might sound intimidating, but it's actually one of the most accessible ways to grow your wealth over time. However, it's essential to approach it with informed, safe practices. In this guide, we'll break down every step, so you can confidently take your first step into investing. Remember, the stock market isn't about getting rich quickly, it's about growing wealth steadily and securely. 1. Initial money requirements. The first question most beginners ask is, how much money do I need to start? The great news is that you can begin investing with as little as $100. However, this money should be something you're not planning to use for immediate expenses like rent or groceries. Think of investing as planting a tree. It takes time to grow and bear fruit. Successful investing requires patience, so view this as a long-term commitment to your future financial security. 2. Open a brokerage account. To buy and sell stocks, you'll need a brokerage account. Setting one up is easier than opening a bank account and often free. Many platforms like Robinhood, Fidelity, and the Asterisk Trade are beginner-friendly and offer promotions like free stocks just for signing up. A brokerage account is your gateway to the stock market. Take some time to research which platform suits your needs, focusing on fees, ease of use, and available tools for beginners. 3. Deposit money into the brokerage account. Once your account is open, it's time to fund it. Link your bank account to transfer money to your brokerage account. This step is straightforward and usually takes just a few clicks. Think of this as setting up your wallet. It's where your investing journey officially begins. Be intentional with the amount you deposit and ensure it aligns with your financial goals. 4. Choosing stocks to buy. Here comes the exciting part: choosing what to invest in. For beginners, it's crucial to diversify your investments. This means spreading your money across multiple stocks or funds to reduce risk. Start with well-known, stable companies known as large-cap stocks. Avoid risky penny stocks as they are highly volatile and unpredictable. If individual stocks feel overwhelming, consider ETFs, exchange-traded funds, or index funds. These funds allow you to invest in a broad market segment. Popular options include SPY S&P 500 ETF, IBV iShares Core S&P 500 ETF, BOO Vanguard S&P 500 ETF. These are great for beginners because they offer instant diversification and lower risk compared to buying individual stocks. 5. Buying stocks. The process of buying stocks is simple. Search for the stock or ETF you're interested in using its ticker symbol, for example, F for Ford Motor Company. Decide how many shares to buy. Set the price either at the current market price or a specific price you're comfortable with. Example, if you choose to buy Ford shares at $10 each, you can decide how much to invest based on your budget. Once you confirm the transaction, congratulations, you're officially a stockholder. 6. Selling stocks. The goal of investing is to sell stocks at a higher price than what you paid for them. Selling is just as easy as buying. Simply select the stock you want to sell. Choose the number of shares and price. Example, if you bought Ford shares at $10 and sell them later at $15, you've made a profit of $5 per share. Timing your sales is important, but for beginners, focus on holding your investments long enough to see meaningful growth. 7. Withdrawing money. Need to cash out your profits. Withdrawing funds from your brokerage account is straightforward. Most platforms allow you to transfer money back to your linked bank account within a day or two. This flexibility ensures you can access your funds when needed, but remember, the longer you keep your money invested, the more opportunity it has to grow. 8. Taxes on stocks. When you make a profit from selling stocks or receive dividends, you'll owe taxes on those earnings, but here's the good news. If you lose money, you might be able to claim a tax deduction. Your brokerage will provide a yearly tax form 1099 consolidated to help you report these transactions during tax season. Pro tip: holding investments for more than a year qualifies you for lower long-term capital gains tax rates, so patience pays off literally. Starting your journey in the stock market doesn't have to be complicated or intimidating. The key is to start small, stay consistent, and keep learning. As you gain confidence, you can explore more advanced strategies and expand your portfolio. Remember, investing isn't about making quick money. It's about building long-term financial security. So, what are you waiting for? Start planting those financial seeds today and watch them grow into something remarkable over time.